Bitcoin, the pioneer cryptocurrency, has served as the foundation for the emergence of various alternative coins, altcoins. While Bitcoin remains the dominant player in the crypto space, it is essential to understand the differences between Bitcoin and altcoins. Firstly, their underlying technologies differ. Bitcoin operates on the proof-of-work (POW) consensus mechanism, where miners compete to solve complex mathematical problems to validate transactions and add them to the blockchain. Altcoins, on the other hand, employ different consensus mechanisms like proof-of-stake (POS), delegated proof-of-stake (DPS), or even novel mechanisms such as proof-of-space (POS) and proof-of-authority (POA). These alternative mechanisms offer various advantages and drawbacks related to security, speed, and energy consumption. Secondly, altcoins often introduce new features and innovations that address the perceived limitations or shortcomings of Bitcoin. For instance, Litecoin focuses on faster block generation and lower transaction fees. Ethereum enables the creation of decentralized applications, dApps, and smart contracts, and Ripple facilitates frictionless cross-border payments. These altcoins have distinct use cases and target different market segments, aiming to offer unique value propositions that may not be possible on the Bitcoin network. Another crucial distinction lies in the coin's monetary policies. Bitcoin has a fixed supply of 21 million coins, ensuring scarcity and potentially reducing inflationary concerns. Altcoins, however, vary widely in their supply models, with some having fixed supplies like Bitcoin, while others implement inflationary mechanisms or even burn tokens to regulate their quantity. Consequently, altcoins may have different monetary properties and risk profiles compared to Bitcoin. Furthermore, the community and governance structures of Bitcoin and altcoins differ significantly. Bitcoin's development and decision-making process heavily rely on consensus within its decentralized community without any central authority. In contrast, altcoins often have more centralized governance models, wherein a core team or foundation holds significant influence or control over the coin's direction. This centralized decision-making can have its advantages by facilitating faster upgrades and changes. But it also introduces potential risks regarding centralization of power. Lastly, liquidity and acceptance play a significant role in differentiating Bitcoin from altcoins. Bitcoin enjoys broader acceptance and adoption, with more merchants and businesses accepting it as a payment method. It also has a more extensive network of exchanges and trading pairs, enhancing its liquidity and accessibility. Although some altcoins have gained notable popularity and liquidity, they typically have more limited acceptance and trading options, making them less accessible and more susceptible to market volatility. Understanding these differences between Bitcoin and altcoins is crucial for investors and enthusiasts in navigating the crypto landscape effectively. Each cryptocurrency offers unique characteristics, technological approaches, and value propositions that cater to distinct user needs and preferences. By comprehending these distinctions, individuals can make informed decisions based on their investment objectives, risk tolerance,